What's up, guys? My name is Evangelos Chalikis, and today we're back with another episode of the Spearhead Portfolio. The portfolio where I focus in fast growth, high quality companies with large moats, high cash flow that can withstand basically any downturn. As we build it, we have been through some waves. We were in a very nice position prior in the past of the year, actually, but now this correction has gotten a hold of us and we are in the red. It doesn't matter that much for me. I'm a long-term trader. I build my positions for the long term. Right now, the value of this portfolio is 7k, but I have almost 2,000 euros in locked in profits. So I don't mind that much because I'm in the green overall for this portfolio from all the wins that I get. But what's going on right here? If we want to talk about the stock market, we have to start with the stock market technical analysis to see what's going on. I was looking at the monthly chart of the S&P 500 before this video, and look at that. Look at this correction here. Look at this uptrend that we're still inside of. And as it was normal, we were overextended, and now we went all the way back. And we're starting October right here. This is the small green candle. If you can see it, let me make it bigger so you can see it. The small Greek candle that we're starting the month with. Look at that. And we went all the way to the bottom to test this pink line, which is like the 30-day simple moving average. What you can see here is that we are way below the 200-week moving average, way above, but that doesn't matter that much. The point is that the correction is almost done, and I say almost because we have still, if we look back the daily chart, we can still drop a tad lower. Look at that. Let me show you. Look at that. We can still drop a tad lower. As I said in a prior video where I talked about the technical analysis of the S&P 500, it's not entirely crazy to drop all the way back to 4,200 or even lower, 4,100, even break this line for a while. It's not that big of a deal. But most stocks have corrected a lot and they are in a good position overall. I'll tell you the updates that I did in this portfolio, what I bought, what I sold, and everything in between, and which companies I'm buying right now because I'm building a position in LVMH, Moet Hennessy, Louis Vuitton. And this is a position that I would like to build a lot for the long term, since this company is right now went all the way from 900 back to 700. Is in a great position right now for me to buy for the long term, the way I look at things, at least. So what happened since the last time? I increased my position in MasterCard. I'm almost at one share right now with this correction that we had. I increased my position in Rumble by one or two stocks. Doesn't matter that much. I might buy even more if we drop back again to 450 again. Those are prices I like for Rumble for the long term. I won't build that into a big position, just a small bet. S&P Global, I increased my position and I got over one stock for S&P Global. These are great prices to add for the long term, and I'll tell you in a bit why. I bought one or two more shares of Shopify. These are again good prices. The only positions that are positive right now is this Tesla position where I added a bit and I'm almost at one share right now. I added, I think, around 240 or 245 with the prices. And look here what's going on. A big indicator that I use is the 200-week moving average. And look at that. We are with S&P Global, we are around the 200-week moving average right now. So you can speculate that these are not at least awful prices for the long term. They're not awful. They're not great, but they're not awful either. MasterCard. I think MasterCard didn't even go close to the 200-week moving average, but yeah, touched many times the 100-day simple moving average. That's one thing to notice on MasterCard. But MasterCard has those small corrections, so it usually doesn't drop below the 200-week moving average over the long run. Right now, it's in anyone's guess if we drop below or if we use that as a support to and after this big consolidation to go even higher. But as you can see, the drops are minimal most of the times, and I think there's a big upside for MasterCard. Why? Because we are going to live in a cashless society, and I think MasterCard will benefit a lot from that along with Visa. But I choose MasterCard overall from those two. Tesla. Tesla, I would like to increase my position. It's a company I like. But let's focus more on this video to LVMH. I bought it, I think this is the France stock market, if I'm not mistaken, the Euronext one. But anyway, I bought LVMH under the ticker MC. And this is a company that we need to take a look at. Right now, it has a $393 billion market cap. It has a 1.7, almost 2% with the recent drops dividend yield, which is nice for a company like this, which is a luxury company, for those of you that don't know, that's based in Europe. One of the best companies in Europe that pays the highest taxes to France. It's a founder-led company from Bernard Arnault, which I like, and we'll talk about him as well. And I recently started my position in Louis V at these prices, 713 euros. I think I bought my first batch at 7-Eleven, like a couple days ago at 7-Eleven, and then bought some as we went higher. And I already have 1/4 of a share. My plan is to get 1 share at least before we move back higher or before the end of the year. So I will focus a lot on this, on LVMH. I want to get to 1 share of MasterCard, 1 share of Tesla, and maybe increase my position in S&P Global and Shopify too. But I would love to buy S&P. I would love to buy Shopify, and we'll go back to LVMH soon. I would love to buy Shopify around 50. I would love to buy Shopify around 50. I believe this is an insanely good price for the long term. But anyway, let's go back to LVMH. LVMH, 393 billion euro, basically dollars market cap, a P ratio of 22. I would like to check the historical PE of LVMH. Let's see that, to see and determine whether these are good prices to add. It says here that it has a median PE of 25, and right now we're at 21. That's interesting. Let's check. I think this is a nice your website as well. Look at that. For the last year, these are the best prices that you can have for LVMH. It used to be lower. It used to be lower back in 2022, but for a very brief while, look at that. It's very rare that we go below 22, and right now we are 22. We spent a very short amount of time below 22, and right now we're back again. It's 22. So I think this presents an opportunity for investors right now around the stock market. That's one thing to look for in LVMH. I recently checked too whether anyone else holds this company, but not many super investors hold it. I didn't expect that. I expected at least one or two. LVMH, let's see. But almost no one. I think I saw one or two. Yeah, this is the only guy that holds some LVMH right now, Thomas Russo. And I think he added a bit in the last quarter of his filings. So not big interest from super investors. And another article that I read lately was this one. Bernard Arnault, which is the CEO of LVMH right now, spent 230 million on LVMH shares after disappointing earnings hit stock. This is a month-old article, but it says that basically after 3 days after the July 25 earnings report, where the stock was higher, the stock was very higher. Let's see, look at that. Let's go to the 1 month chart. The 6 month chart, and let's go back all the way to 25th of July. Look at that. Look at the prices he bought. He bought 230 million euros of LVMH at the price of, let's say, 810. and we're $100 below right now. When the CEO buys, he's only buying for one reason, because he thinks the prices will go higher of the stock. He believes in his company for the long run. I'm listening to that. I hear him, and he bought 250 million euros of LVMH shares, since the luxury conglomerate's disappointing earnings in late July contributed to a drop in the stock price. So if he's buying, why wouldn't I buy? Since he's the CEO, he knows something more than me. The French businessman, let's read this article, and his family own about 48% of LVMH shares, with almost 64% of the voting rights. Regularly buys LVMH stock, with breaks for the blackout periods around earning reports, the filings show. It says here about the earnings. The 7.8 drop in LVMH shares last month was the biggest monthly decline since September. That also presents an opportunity. I think the higher interest rates play a role, but when I think of the stock market 3-6 months from now, or maybe a year, I think it will only land higher. So that's why I started building my position right now. It says some stuff here about his wealth, but we don't care about that. He's buying the stock. That's the main point of this article. Let's see if there is anything else interesting. Coach Parent buys Versace and Michael Kors owner for 8.5. Okay. Bernard will pay 168 million to sponsor the 224 Summer Olympics. That will be interesting. Some ad spend right there. Some expenses. Let's check this article as well. The theory that luxury stocks are Europe's strongest response to Wall Street, high-flying tech stocks, is being put to the test. This is an article from September 10. What we are seeing on luxury is the end of a consensual long. So this guy is kind of bearish right here. Referring to a rush by investors toward this sector in the first half of the year. Europe is typically very sensitive to world growth, and this is hurting luxury, as there is evidence of a slowdown, he says. This guy has an underweight position on luxury and doesn't plan to buy the stocks until a further pullback makes them more attractive. I think a further pullback is not insane. It's not a crazy thing to say. It's not something that can't happen. And I don't think it's crazy for the stock to go all the way back to 20p as it usually does, and maybe hit, let's say, 600. I would buy even more. The more it drops, the more I would buy, the way I see things right now. The latest survey of China's services industries revealed more negative data for luxury names, with a slow expansion this year in August. That data suggests the nation's consumers aren't optimistic about their future income because of the faltering economy and are tending to save rather than spend. LVMH CEO and soaring bond yields have proved bruising for a group of companies. LVMH CEO status as the world's wealthiest person has been a high-profile casualty of the 50% slump in an MSCI index of luxury stocks. Yeah, we don't care about that. For other investors, the sector's high valuations leave little tolerance for any disappointments. The MSCI Europe Textiles, Apparel and Luxury Goods index trades at 24 times projected earnings, above its historical averages and a massive 90% plus premium to benchmark indexes. Yeah, not that many news or valuable information here. Let's finish this article. Analyst sell price projections still don't reflect such concerns. Their aggregate price targets imply a 25% gain for LVMH over the next year, and 28% increase for Gucci and Kering, these are competitors, and a 9.5% advance for Birkin bag makers Hermes. The stocks performed well this year, so it makes sense to take some profits. I think that makes sense, truly, at the top of the cycle, not right now. Let's go to Google Finance for a bit to finish this video in a while and compare this LVMH, which now has a price of 740 euros, 14 euros, compared to, let's compare it to Hermes and maybe the S&P to see how it performed. Let's go year to date. So LVMH, the S&P 500 is up 12%. Hermes is up 17%. So Hermes is performing better, and there is maybe more downside for Hermes right now. But it seems like LVMH is underperforming. And it went, let me see, all the way from, I can't even click on that. It was 30% up for the year until April, and then started dropping, and right now it's almost flat for the year. Wow, LVMH is flat for the year. I think that's a mispricing of the market right now, while Hermes is still 15% higher, and S&P is around 12% after this big correction that it had. Interesting. Okay, let's go back to the portfolio, and this is my plan right now. I would love to add more on to LVMH, get a full share of MasterCard, a full share of Tesla, and then increase my positions in S&P Global and Shopify. I didn't talk about MicroStrategy that much today because I talk a lot about Bitcoin, and Bitcoin MicroStrategy matches the price of Bitcoin. I think Bitcoin is in a small downtrend right now and in a big consolidation period for the rest of the year. I would love to add MicroStrategy below 200 again, like when we drop below 300 again. Those would be great prices for the long term. But yeah, I don't worry that much. Let's talk about GDXJ to finish this video. I talked about gold in a prior video, and GDXJ is basically tracking gold. It's a leverage play compared to gold and with gold. So right now, since gold lost a key level like this one, a lot of downside will come. Look at that, we dropped below the 200-week moving average. We are in this huge consolidation period for the last year. Good things will happen in the long term, but there is plenty of downside right now from here. I told you guys to maybe sell at 1950 after this market breath on the upside if you are scared, if you are worried. I'm not that worried that much. I would actually like to increase my position a bit at lower prices. But yeah, besides that, that's how the Spearhead portfolio is going right now. Not so well, but we will recover, I believe. And I think the last video we were around 6,700, 6,800 euros. Right now we're at 7,100. So I'll see you guys on the next one. Tell me your thoughts down below. Tell me what you would like me to cover or what you are investing in and you think would be a good idea and a good add on this portfolio, or why not. Those are good or bad positions that I have. So I'll see you guys on the next one. Peace.